Good evening, friends. How are you all doing? Hope you had a lovely week. Markets gave a great rally, and it was a week full of events. Rather, US elections, one of the most important events in the entire stock market globally. It was a market with massive return across the globe, be it Indian markets, European markets, US markets, everywhere. Markets somehow cheered whatever the outcomes of elections are, plus the fundamentals were pretty good. So, in this weekly mastermind session, I'll again share the data, how you should be planning your investments for the next week, how you should be planning your trades. Remember, in the last week, I had given you, a bullish views on banking, auto, metals. They did pretty much well. So let's start the day and let's see what we have in store for us. So let me pull up, let me share my screen with you first. So once again, let's start the day with one of the most famous quotes by Jesse Livermore. No man is intelligent enough to be trading always. Bottom line, there are times when you should be sitting on the sidelines to see further more developments or the markets to confirm your views. There are times when things needs to be settled down. At times, see, one of the biggest losses happen when we trade out of fear of missing out. It happens with lots of people. At times you'll end up missing some moves out of the market, and then you will jump into the market at way at the tip of the market, and that's the time when markets will take a u-turn and you would be losing a lot. So don't do that. You need to understand, markets are not going to close. So by mere market nahi band ho raha, you will get your opportunity. Trend would be there. You will get more trends. Things would happen once again. Trading again is 90% mindset. So it's very, very important for you to settle down, relax, wait for the right move. It's just like a sniper game. I have been telling you always, you have to wait for your opportunity and hit right at the spot. So let's start the day and let's see what's in store for us. So in the last week, as I had said, banking, auto, and metals are looking most best. So in last 1 week, Nifty has given over 5% return. Banking index, that's Bank Nifty, over 12%, massive returns. PSU banks did 9% positive. Finance again did massively well, over 10% return in a week. Metal index was, I would say, out of banking and finance, was the second highest gainer with 6.69% positive week. Autos were the 3.19% positive for the entire week. IT was kind of 2.75% positive. Pharma did well too with 3.38% positive. VIX, that's the volatility index, sharply down by 17.19%. So which actually means that markets somewhere are stabilizing. I mean, the fear factor that we had in people, that's easing out. So that's a very, very positive sign for the market. FMCGs again, 2.45% positive, Nifty Energy positive, consumption positive. So overall, all the major indices, so it was an overall market was positive. There was not even a single index that did not do well, not even a single major indices, okay? Now let's take a look on how Nifty is placed and what you should be looking at. Now this is the monthly chart of Nifty. Two things. Number one, as this is monthly chart, so talking about it right now is doesn't make much sense because the month is still on, but still, I personally have a view on markets that you should always have a complete holistic view on the markets, what may happen, what may possibly happen, so that you can plan your investment accordingly. So if you look at the two lines that I have drawn, let me just check with the highlighter. So if you see this line at the top and this line at the top, so this is why this becomes very important, because if you see on this particular monthly chart, 4 months, 5 months were positive, then we had a negative month. So this is the line of 20 months moving average. So Nifty is trading way beyond its 20-month moving average, and the line at the top that you see somewhere on the monthly charts, this is the highest ever closing. So again, monthly chart has not closed yet, as I said, so it will be very important to see whether Nifty closes above where it was on Friday at the end of November. So I would personally suggest, please write down where markets were on Friday's session, where it closed, and check it out again at the end of the month. If it's above it, you would be getting the highest ever closing on monthly charts. So on front of RSI, it has come right at 60. It would be pretty impressive and interesting to see whether RSI goes above 60 or takes a resistance here. Now on ADX front as well, it's kind of rising. But again, if you look at the both positive and negative DMIs, they have kind of converged. Rather, the green line, that's the positive DMI, is now a little bit rising. So that's positive. So somewhere you can say that the long-term view of Nifty is changing from sideways to bullishness. However, you are aware at the tip of the market, the top of the market, you need to be precautious. Let's take a look on the weekly chart. On the weekly chart, again, the RSI has come above 60, so that's very much positive. Nifty has closed above the Bollinger Band, so that's again a positive sign. If Nifty continues to move above the Bollinger Band, we may see something like band walk, and band walk again would be usually band walk may give you up to 10% returns on the upper side. So what we are talking about 13,000 plus levels, and looking at the fundamentals and market scenarios all across the globe, that doesn't look that much possible. And even on indices, usually indices trade within the Bollinger Band, at least on the weekly scale. It's very, very rare that you would see indices trading beyond out of the Bollinger Band on weekly charts at least. So it's something like you should not be aggressively buying at this point of time. Now, let me share some more reasons why you should be taking a hold in the market on the daily charts of Nifty. Now, if you see this daily chart, there are two things to watch on. Number one, your support area, first of all, is this particular rising window, where this particular gap area, which we had previous high as well, around 12,030. So in case we see any dip on markets, so this is going to be the decision making price, that's 12,030. It's going to be very, very important support range. And in case we go below it, next support would be the bottom of the window, so that's placed around 11,930. So more or less this 12,000 to 11,900 is going to be a decision making factor. Rest, one thing very important, if you take a look at this big big black thing that I have drawn, this is basically a deviation from the 20. This red line is the 20 days moving average, which is placed around 11,880, and Nifty is trading almost 400 points away from its 20 DMA. Now, why is this important? This is very important for a very simple reason. On a daily basis, on a daily chart, markets, Nifty does not sustain above like 500 or 600 points above the 20 days moving average. That's an extreme deviation. Not that you start shorting it out, not that it's negative, but again, it's deviated. You need to wait for markets to cool off a little bit. Now, that may happen if markets go sideways or fall a little bit. Then you can be buying again if you see markets taking support somewhere. So on tip of the market, don't buy, wait for some sort of consolidation. And in my personal opinion, in case we see like anything between 50 to 200 points of movement on the upside, I will start booking profits on like 40% of my portfolio, or you can start writing calls as well if you have a portfolio that's giving you money. And in case it's negative too, still you can start doing that, because your portfolio would always already be into profits. So that's perfectly fine. So again, what you need to do is wait for in tomorrow's session, on Monday's session, if in case Nifty gives you an upside of, let's say 50 to 200 points, anything between that, you should be booking some profits, taking off some money from the markets. Wait for the markets to consolidate or to fall a little bit to settle down. Currently, markets seem to be deviated, and this deviation may cause a little bit of fall. Now, if you take a look on the previous instances as well, for example, this big red candle, Nifty was again 550 points deviated. If you see this big black candle, once again, this is again when Nifty was kind of 550 points deviated. So anything above 500 points or 400 points of deviation is kind of unstable in markets. But yes, this rising window with big white candles also means a lot. So Nifty's trend for sure is going to be positive, with your support area to be around 12,030 levels. So that is how you should be managing your portfolio and your position and your trades as well. Now let's take a look on Bank Nifty, what we have. Again, Bank Nifty has reached a very important level on, this is the monthly chart number 1 of Bank Nifty. If you take a look on DMIs, both the positive and negative DMIs, that is this green and red line, they have converged. Now, usually whenever you see the DMIs converging, you see a kind of sideways movement. But in this scenario, you need to look at it from a different perspective. The red line was above, which means Bank Nifty was kind of long-term bearish. Then it's coming down, and the white line, green line is going up. That is the bullish DMI is going up. So somewhere it's like markets are changing their momentum from positivity to negativity to positivity on a longer term time frame. Now, if you take a look on this particular line, this is a 20 days moving average on monthly charts, 20 SMA, rather 20-month moving average, you can call it. In case Bank Nifty sustains above it, we are looking at some humongous returns for a very simple, that is the reason why I have told you to keep a watch on Bank Nifty and Nifty. In case it closes above these current levels for the month of November, we are looking at some fortune making money. If you recall, in some of my previous videos, I have told you that we are somewhere expecting, I am personally somewhere expecting the biggest bull rally of stock market history. Now look at this thing. This is where in 2016 Bank Nifty closed from above the 20 period moving average, that is 20-month moving average. This is a period of 2016, and Bank Nifty was used to trade around 17,000 level. Then it gave a return till 32,500, 600 rather. It doubled almost in 3 years. So that is the reason why this 20 period moving average is going to play a very, very important role. So in my personal opinion, we should be keeping an eye whether markets sustain above the current levels for the month of November, or we undergo some sort of consolidation. So in case we go under some sort of consolidation or a correction, that's also perfectly fine, because usually the month of November, December, where we are reaching, these are kind of subdued months. Lots of investors go on holidays. It's a festival season, volumes are thinner, so you may not see some big actions. Now let's take a look on weekly chart of Bank Nifty. Now on weekly time frame, Bank Nifty again has gone above the Bollinger Band. So that is positive. Once again, I said on weekly basis, indices very seldom trade above the Bollinger Band. Mostly they trade within the Bollinger Band itself. So plus, the crucial price range that you need to be looking at is 25,200 to 25,600. That is going to be your support area for Bank Nifty in case it falls down. Now, one thing very important, last week's candle, if you see, it opened somewhere around the bottom and closed around the top, and it's a big green candle, big white candle, rather a bullish candle. Now this is a learning for the session. This is called a bullish belt pattern. Now what is a bullish belt pattern? Now if you remember in fights, what happens is you fight for belt. So technically, candles like this means bears were completely thrown out of the ring. In the entire bulls and bear fight, bears were completely thrown out of the ring, which means bulls were completely dominated on the market. So candles like this are going to provide a complete benchmark for coming months, coming weeks and months. So in my opinion, the week that has gone by, the highs and lows are going to be very, very crucial to decide Bank Nifty's future going here onwards. So obviously positive, look for buying opportunities on dips, of course, when it takes support. Rest, this is how you should be managing your trades. You need to buy, but again, you need to wait right now. This is not the time where you make new entries. This is a time where you need to start booking profits or hedging your portfolios or writing some options to protect your profits. Because again, markets go into cycles. It's an uptrend, then distribution, then downtrend, and then accumulation again. Now at the top of the market, it's a time to book some profit, not to buy. You buy when markets give you some sort of support area to buy. I'll show you how you do buying as well. There is something to learn from this particular session. Let's take a look on weekly chart of Bank Nifty, because that is where you will get more clarity. Now on weekly chart, two things that I want to show you here. Support area 25,200 that we already talked. Your resistance, immediate resistance is placed around 27,100. Its 20 DMA is placed around 24,500, and currently Bank Nifty is around 26,700, which means we are almost 2,200 points deviated. So again, that's kind of unstable. If you look at the previous rallies, any deviation around 2,000 points or 2,500 points is unstable. Not that market changes its direction, the trend still remains up. However, deviation will always make sure that the markets settle down to their basics so that it can prepare for the next upward movement. Now, why you should not be buying at this point of time? If you look at these lines, I have drawn two, this red line here and this red line here. So this is, if you look at RSI, it has not made a higher high, but the prices have made a higher high. So of course, the buying strength at this price is not high at what we used to have at this price. So it's a kind of diversion on RSI. There is a momentum divergence. Now on a momentum divergence, of course, you are not supposed to be short selling, because for that prices need to confirm the divergence, and divergence coming around 70 levels should not be used for trading as well. A divergence is a healthy divergence and can be utilized for trading in case you get a divergence on a level of, let's say, 60 to 70, 60, 65. So it's still bullish, but deviated. Now, how to find out trades, how to trade on how to trade on divergences. Now, take a look on these two blue lines. If you take a look on these two lows, markets have made a higher low, this low and this low. This low is of course higher than the previous low, but if you match the RSI, it has made a kind of new low altogether, which means there was intense selling pressure in comparison to this selling. At this level, we had a higher selling, but still markets made a higher low, which means the entire selling pressure was absorbed by the bulls. And that is where there was a trade to approach. And when markets opened with a gap up and a green candle, first green candle, and went above this big black candle, which was the 25,200 levels. If you remember, in the last week as well, I had told you the price levels of 24,200 to 25,200 is going to be your resistance area. Above that, you are bullish. So the moment this 25,000 range was taken off, we saw a massive rally of 1,500 points. The clients which are following in our inner circle, they made good amount of money. So divergence is there, deviation is there. Of course, it's not the time to buy. Not that we are bearish on the market, we are still bullish, but we'll either trade with options in case, let's say, market opens up and stays up and we find any buying opportunities. We would not want to trade with futures at this point of time. We would want to trade with options or start writing some options on the upside. So that is how you should be managing your banking positions as well. Now, let me share what are the views on other sectors. Metal index view is bullish. Nifty IT, the view is cautious. It's trading around 20 days moving average. RSI around 50, no trades as of now. It's kind of struggling, sideways movement in Nifty IT. Pharma view is positive. You can buy above 11,750 levels in case index, pharma index sustains above 11,750 levels. You can buy, find some buying opportunities into pharma. The last session's candle was a bearish engulfing pattern. So that's the reason why you should be careful on pharma index. Nifty energy, again, bullish, but kind of deviated from its important moving averages. Nifty auto. So the auto index is bullish to sideways. It looks struggling to maintain its highs. Last session was a kind of gravestone doji. And in the recent upside move, it made its high as well. And a gravestone doji coming at the top, it could be it could be hinting you towards some sort of trouble at the higher prices. So bottom line, if we combine all other sectorial views and then we look at the extremely high deviations on Nifty and Banknifty, it's the time to start booking some profits and protect your profits, start writing some options and wait for markets to settle down, consolidate, or give you a dip and find another opportunities. See, we already have a rally. You don't trade post a rally. The trade is made when the rally is about to start. It's like you have already missed the opportunity in case you missed the rally. So not that you have missed the opportunity forever. you will get a chance again. So that would be all in today's session. Feel free to like, share, and comment. You can ask me anything that you want to know about your stocks, your trades, anything that you wish to know on the markets. I'm also planning to start a kind of weekly training sessions. In case you are interested, you can share your feedbacks, you can share your inputs, whatever you want to understand. So that would be all in this weekly mastermind session. Thank you so much for watching and listening. Abhishek Raj signing off. Stay healthy, stay wealthy, and God bless you.